Hi, everybody. Welcome to our Tuesday program in our Carroll Cash Week this week. Today is Tax Topic Tuesday, 2020 style. We know everything is different in 2020. So why should taxes be any different? And I just wanted to start off with thanking everybody for joining us today. We have a week's worth of great programs. Financial fun, financial smart. We've got a lot of things that you can learn this week by tuning into all our programs. And I just wanted to see if everybody knew that they can stop by any of our 6 Carroll County Library locations and you can pick up a Carroll Cash Week take-home kit, which is loaded with all kinds of handouts, some fun stuff for the whole family, some great resources in there that today we're going to be sharing a couple tax resources that are going to be in this kit also. You can also receive a link to all those documents and those handouts as well. So we will be sharing those documents. We'll be posting on the Facebook Live comment where that link where you can download them at home if you haven't had a chance to stop by one of our 6 Carroll County Public Library locations to grab your own Carroll Cash Week take-home kit. And in case you didn't know, our branches are reopened for limited service, so you can stop by not only to pick up that kit, but you can browse for some materials, check them out, and head about your way. But just like everything else, we require that you wear a mask when you stop in and make your visit brief if possible, so that way we can let the next person come in since we are at limited capacity for our limited services that we're offering. Well, today, like I said, was Tax Topic Tuesday, 2020 style, where we're going to learn about taxes and how they may be different in the time of COVID. And I want to introduce our friends from HSP. We have Jen Claggett and Rachel Muse with us today. Take it away.
All right. Well, I would just like to say welcome to everybody. My name is Jen, as Daryl had mentioned, I am from HSP, as well as Rachel, who's here with me. And today we're going to talk a little bit about taxes and what you might see on your 2020 return. If just a little bit of housekeeping at first, if you've got any questions, feel free to reach out through the chat and we'll try to somebody will get in touch with me and we'll try to answer them as we go along if needed, or you can simply wait till the end. We will have time to go over questions at the end. Let's see, let me go ahead and start this slideshow. So hopefully everybody can see that. So again, as Daryl mentioned, welcome to Carroll Cash Week. So we're doing a whole lot of stuff this week, lots of great programming. We're talking about, tomorrow we'll be talking about budgeting and, kind of how to do that, in the midst of all this crisis that we're going through, which can be very, very tricky. It has been very tricky for a lot of individuals and families. Today we're obviously talking about taxes, and then on Thursday we're going to discuss a little bit about how to build good credit. We'll talk about how to go about getting your credit report. So that's all during our credit cafe, and then we'll stick around for questions following each of those sessions. And then on Friday we're doing some games, and so it'll be a lot of fun. So I hope you'll join us throughout the rest of the week. So a little bit about HSP. HSP is Carroll County's community action community action organization. So our mission really is to give hope, inspire change, and provide opportunity for everyone in our community in the fight against poverty. So specifically, we work with low to moderate income households in the community. And really for everyone, we do webinars like this, just because everybody can use a little financial education from time to time. We have a variety of different services. We run the majority of the shelters in our community. So within Carroll County, we also have a number of housing programs to provide housing opportunities for a homeless population. Our economic mobility program is double-parted, just working with some job skills, and then also this is where we do our financial webinars. Along with this, we also run a tax site, so a free tax site during tax season, which we are currently getting ready to get going again in January. I can't believe we're there already, but here we are. So, and then we will prepare taxes for free. Typically, our threshold limit, we can prepare your household tax return for those who earn less than $56,000 a year is typically what the cutoff is. We haven't heard from whether the IRS will raise that threshold a little this year, but we can definitely let everybody know. We also have a home energy program, so if you're in need of a little bit of assistance with your energy bills, we can assist with that. And then we also have a family support center that does a lot of parent education, and for parents who have young children, gives them the opportunity to have their children engage in childcare while they're working on their GED or language skills. So that's just a little bit about what we do. Certainly, HSP, really does partner with a lot of different organizations, including Carroll County Public Library, to bring you informative programs like this. So a little bit about what we're going to talk about today. So these are the objectives we want to run through. Obviously, we're going to talk about how taxes impact or how everything that's going on this year is going to impact our 2020 tax returns. So in that, we're going to talk a little bit about the economic impact payments that most of us have received this year, and how they will impact tax returns on our 2020 returns. We'll discuss a little bit about unemployment benefits and how they will have an impact on our tax returns. We're going to review any deductions that you may be entitled to, so just some things to think about as far as that goes in the coming year. And then we're going to learn about some changes to the early withdrawal penalty for distributions from a retirement plan. And then really the fifth goal is we want to give you some information about where you can find any additional resources or information if you have more specific questions. And then we'll also talk about where you can go to file your tax return for free this year. So a little bit of context then. So as of yesterday, the total number of COVID-19 cases in the United States was more than 8 million. So these are, folks that have gotten the virus. And then the deaths associated with that are well over 200,000 in this country. And certainly this has been such a worldwide pandemic. It's shut down our economy for a time. It's forced a lot of changes on us this year. It's in the midst of all of that, there have been other things that have been going on. So it's been a bit of a rocky year for all of us. Additionally, during this time, just to show what an impact this has had on our economy, we had over 44 million Americans file for unemployment during the COVID-19 pandemic. And this was just back in June. So just a little bit of statistics to give us some context for why we're discussing all this today. So with the coronavirus, and all of its all of the impact that it's had on our country, the CARES Act came about to help Americans kind of weather this storm. So this was signed into law on March 27th of this year. And the economic relief package was over $2 trillion. And this had a number of different things that were developed in it. If you want a little bit more information about the CARES Act, I've actually included a link here to the United States Treasury. They go over a lot of the policy issues associated with the CARES Act. So a lot of what pulled today comes directly from that. So the CARES Act in short the CARES Act is short for Coronavirus Aid, Relief, and Economic Security. So within the CARES Act, we had a couple different things. The first thing was specific assistance for American workers and their families, and this includes our economic impact payments. Then there was additional assistance for small businesses. So this included things like the Paycheck Protection Program, economic injury disaster loans. So if you had a small business, you were eligible to apply for certain loans. In addition, there was also emphasis on preserving jobs in the American industry. And this included an employee retention credit, a payroll tax deferral, and payroll support. And then we had specific assistance for state, local, and tribal governments, and that was over $150 billion in a coronavirus relief fund. So this was distributed from our governments, from our local and state and tribal governments to assist with specific, more regional issues associated with the coronavirus. So what I'm mostly going to focus on today is the assistance that went out for American workers and families. So that first bullet there. We'll talk a little bit about how things in your tax return might affect a small business, specifically contractors. But mostly what I'm going to focus on today is going to be more specific to individuals and families. So again, as I mentioned, for more information, you may want to visit the Treasury website, and that is treasury.gov for a little bit more information about the CARES Act. So how will the CARES Act potentially affect your 2020 tax return? So this will happen in a couple ways. Obviously, the first one that I want to talk about are the economic impact payments. And again, this is specific to individuals and families. The next thing we want to go over is if you've received unemployment, how that may impact your tax return. And then we'll talk a little bit about some of the deductions that are available for any changes that may have occurred for you this year. And then we'll talk a little bit about retirement accounts. If you had to make an early withdrawal, how that will be impacted on your tax return. Okay, so economic impact payments. Certainly, I think most Americans at this point have gotten their economic impact payments, and these are also referred to as stimulus payments. So you've probably heard the term stimulus payments a little bit more in the news. I kind of refer to it as both. So just know that when I say economic impact payment or stimulus payment, it's the same thing. So the economic impact payment is also, you might see it shortened here for EIP for short. And that's in some of the slides that I have to show you in a little bit as well. So these very specifically were just one-time payments from the government to economically support individuals and families during the pandemic. So what they are essentially is they're an advanced credit on your 2020 tax return. And I will go over a little bit about that. There was a lot of confusion about how the economic impact payments will affect your 2020 tax return. So hopefully today will alleviate any questions that you may have. Okay, so a little bit about who is eligible for these payments. If you are a US citizen or a US resident alien and you have a work eligible Social Security number, then that's the first step in being eligible for the economic impact payments or stimulus payments. The next thing really is If you had zero income, you would be eligible for this as well. But there is an income limit for the EIP. So in general, if there's a little chart here to the side, this is the limit for the full economic impact payment. And I'll discuss the full amounts in just shortly. But if you have a married filing joint tax status and your adjusted gross income limit, your adjusted gross income is under 150,000, then you would be eligible for the full economic impact payment for that filing status. For head of household, if your AGI is below 112,500, then you would be eligible as well. And for all other eligible individuals, that limit is going to be 75,000. So who isn't eligible for the economic impact payment? So if you're a taxpayer in the following situations, then you probably wouldn't be eligible for the impact payments. So if your income was over 198,000 and your filing status was married filing joint, then unfortunately that kind of puts you above the threshold for that. And the numbers for the rest of them would be right there. So for head of household, that's 136,500 for head of household. If you're over that, then your impact payment would be zero. And for individuals, other eligible individuals, that would be 99,000. So if you're above, if your yearly income is above those limits, then you would not qualify. Also, if you're claimed as a dependent on somebody else's tax return, you wouldn't qualify for. So, for example, if you had a child or a student in your household, unfortunately, they wouldn't be able to get their own economic impact payment. So they wouldn't be issued a stimulus check. Now, certainly there's been some mix-ups with the IRS and everything. So some people got payments who weren't necessarily eligible and vice versa. So we'll talk a little bit about that shortly, and we'll kind of go over, what will happen with that. So the other things that would make you ineligible or that you don't have a valid social security number for employment. So that is definitely a requirement. If you're a non-resident alien, so not a resident alien, but a non-resident alien, you would not qualify. Or if you filed any of the following tax returns for 2019, you would not qualify. If you're deceased, you do not qualify. Again, there was some mix-up with that initially this year. Or if you are an estate or a trust, you would not qualify for these. So how much are the payments? So in general, this is kind of the breakdown for it. If you are a qualifying individual, you could receive up to $1,200 for your stimulus check. If you are married filing joint, then that payment would be $2,400. Again, if you're not dependent on another taxpayer. So again, and then there would be an additional $500 for each qualifying child. So on top of that, you could have up to $500 for qualifying child in your household. Now, for qualifying children, what designates a qualifying child is they have to be under 17. So it's like the child tax credit in this respect. The rules to get that additional $500 follow the rules for the child tax credit. For any amount that that your income is above the first threshold, so for married filing joint, if your income is above 150,000, but it's below that at that amount prior, I think it was 198,000, then you would still qualify potentially for a credit, but there would be a 5% reduction in your payment for any amount that the AGI is above those amounts. I'll kind of go over how this is calculated in a little bit. For right now, actually. So how is it calculated? So if you do not have qualifying children in your household, and I've kind of broken down, since this chart is a little difficult to see, maybe a little too small, I've kind of pulled it out off to the left of the screen. So for example, if you were a married filing joint household and your adjusted gross income was $170,000, then technically you're above that first threshold, the $150,000. So you wouldn't qualify for the full amount. You'd be qualified for the phase-out reduction. So at $170,000, you're $20,000 above the $150,000 threshold. So the way they calculate the phase-out is they take that $20,000 that you're above the threshold, they're going to multiply it by 5%, so 0.05, and that will give you $1,000. So essentially, $1,000 is how they're going to reduce your economic impact payment. And so, and you can see that that calculation down there on the bottom left. The economic impact payment that this household will receive is they're going to reduce the full amount, the $2,400, by the $1,000, which was the phase-out calculation, and that will give us $1,400. So that's for households without qualifying children. And again, on the chart to the right, and this comes directly from the IRS, you can see how they've listed the different statuses and how they might qualify. So then if you have qualifying children, and I'll go over this shortly too then, if you, say the example that I pulled was for a head of household family. So again, I'm going to kind of discuss, you know, if a head of household, if they earn more than that 112,501, then they're going to be subject to that 5% phase out as well. So, for example, this household, there's an individual that files head of household with 3 qualifying children, and this person's total income is $150,000. So that means they are $37,500 above the head of household threshold. So then they calculate the base earned, I was about to say earned income payment, but no, the base stimulus payment, and that is the total amount of the credit that would have been received. So the $1,200 plus the additional $1,500 for the children, because there's $500 for each qualifying child. There's 3 qualifying children in this household, and that gives us what this household would have received if they had been below that threshold, which is $2,700. But with that 5% phase out, so they're $37,500 above that threshold. So that reduces their economic impact payment by $1,875. So really the total amount that they're receiving, that this household is receiving, is $825. So that's a little bit about how the payments have been calculated. And again, these were essentially based on, they were supposed to be based on the 2019 tax return. But because the payments were being issued in the midst of tax season, not everybody, of course, had filed a 2019 return at that time. So the IRS was also looking at a 2018 tax return as well to determine how they're going to calculate the type of payment that you would receive. So you can imagine there was a little bit of trickiness involved with all this. So how are these payments going to affect your 2020 return? As I mentioned before, the economic impact payment is an advance refundable tax credit for 2020. So if you're not quite sure what that is, then we're going to dive into a little tax 101. So next thing I'm going to talk about are credits and deductions and how they work on your tax return. So credits versus deductions. So what a deduction is essentially what a deduction does for your tax return is it just reduces your income. What this does is that the tax that's calculated is calculated for your taxable income. So a deduction will reduce your taxable income for you on your tax return. So an example here is, say we've got $50,000 in income, and we had a $5,000 tax deduction. So that deduction will reduce our taxable income by $5,000. So essentially that's $45,000. But then if you're in the 12% tax bracket, that will reduce your taxes owed by $600. Okay, so on your 1040, just to show you a little bit, is your standard deductions or your itemized deductions are going to pop up here on line 9 of your 1040. So of course we have a choice whether we're going to take a standard deduction or an itemized deduction on our tax return. If we do a standard, these are all listed out here. Or we can itemize our deductions. So say we had a lot of expenses throughout the year, and we think we can beat, if I'm a single person, I have my standard deduction would be $12,200, and this then I would need to beat those expenses when I itemize. So basically, what this is doing is it's reducing our total income so that we're not taxed on as much of it, because obviously there's expenses that we have in order to live. So the government understands that, so they're going to help us out in this way on our tax return. So then what a tax credit does, so not a deduction, but a credit, is it's going to reduce our tax bill dollar for dollar. So if you have $1,500 in income taxes and you get a $1,000 tax credit, your tax bill sinks to $500, because what we've done is just dollar for dollar, we've taken that tax credit and applied it to the amount that we owe. So these are really great things on our tax returns. Now, a refundable tax credit, which is what the stimulus payment is even better. So a regular credit won't ever really turn into a refund, because if we have more credit than we owe taxes, then it's just going to reduce that amount to zero. However, if it's a refundable credit, and we owe $1,000 in taxes, but say we have a refundable tax credit of $1,200, then we'll get a $200 tax refund check back from the government. So that's a little bit about how that works. So again, the stimulus payments are a refundable tax credit. So a little bit about where this would show up. So on your tax return, you'll notice there's a Schedule 3 attached to your 1040. It goes into some of the non-refundable credits and the refundable credits that may occur on your tax return. In addition, on your 1040, this is where they would show up. So there's, you see the credit up here for the child tax credit or credit for other dependents. That's non-refundable, so that appears up top. And then you have your refundable payments down here around line 18. So that's just a little bit about where they would be on your tax return if you want to go hunting for them. So, so some folks are calling this, it's an advance credit, but oftentimes they're also saying it's an advance refund. So that's caused a little confusion for folks. And some people, are wondering, well, if it's in advance of a refund, does that mean that my refund is going to be reduced next year? So the good news is no. These aren't going to impact your, how things would be calculated for, the income that you receive in 2020. The economic impact payment is not considered income. So it's not going to be included in your adjusted gross income. And, it really shouldn't affect your return too much in general. So there are other things on your return that may impact your refund, but the economic impact payment or the stimulus payment will not. If your 2020 tax return and any refund that you do when you file a return in 2021 will not be affected by the money that you got this year. So that's the good news. A lot of people have asked the question too, if they make a bit more money this year in 2020, and they use their 2019 income to qualify, then technically, if they had used their 2020 income, then they may not have qualified for that economic impact payment at the time that it was given. So a lot of folks have been wondering, well, is this something that I'm going to have to pay back on my tax return next year? And the answer to that is no. So for example, maybe you're an individual, you don't have kids, and you earned $60,000 in 2019. So because the IRS used your 2019 income to calculate your stimulus payment, you would have qualified for the full $1,200 in the stimulus check. So in 2020, say at the end of this year, your income totals $85,000, which is going to put you into that phase out range where you're subject to the 5% reduction. So, technically with that 5% reduction, you would have been eligible for $700 stimulus payment, but that money was paid to you this year. So, the good news is that it is not something that you will have to pay back. And so that additional $500, is kind of just yours to keep. So, again, if you were paid more than expected, you do not need to repay this amount. So if, to take that situation and flip it, then if you didn't qualify for the full credit based on your 2019 income, and your income, say, you became unemployed in 2020, your income drastically reduces this year, then you may be eligible for any remaining stimulus credit that you weren't originally sent. So this is actually going to be something, because they're using your actual 2020 income to reconcile the payment that you received, then you would get an additional payment on your tax return for this year. So for example, say you're an individual, you don't have kids, you made $85,000 in 2019, and you only got that $700 in stimulus check. So this year in 2020, your income dropped to $60,000. So you would qualify for the full $1,200. So this year on your tax return, in addition to any other refund that you would qualify, you would get the remaining $500 on the stimulus check when you file at some point in 2021. So hopefully that makes sense. I know that was a lot of math that we went through. So for a little bit more information, and additional questions on economic impact payments, the IRS website, so www.irs.gov, is really just full of information. I would advise people to really check this out first. Let this be your first resource. And near the end, if we have time, we'll kind of take a moment and we'll walk through the website a little bit so that you know where you can find certain tools. They have a whole page that's dedicated to coronavirus tax relief and the economic impact payments. They update this very regularly. So, you know, again, especially as we get closer to to the new filing season, you'll notice that they'll be updating this more frequently with additional resources as to really how these payments are going to affect your 2020 tax return. So check it out if you have the opportunity. The next thing I wanted to talk about are unemployment benefits. With the CARES Act, the CARES Act provided for an additional an additional $600 in unemployment assistance for each week through July 31st of 2020. So if you became unemployed due to the coronavirus or even temporarily, then this additional $600 became available to you. Now that ended as of July 31st, so that's no longer in effect, but it's still something that you're going to have to reconcile on your tax return for 2020. So the CARES Act also stated gave states the option to extend this unemployment compensation to people that were self-employed, so independent contractors or other workers who may really ordinarily be ineligible for unemployment benefits. So this really opened up unemployment, you know, to a lot of different households, which is why, you know, we had over 44 million claiming unemployment benefits throughout the pandemic. You can imagine, you know, this is going to, you know, weigh into your tax return. So the benefits that you may have received would have been issued through your state's unemployment insurance office. And really I should say not, it's the state that your employer resides in. So how these will affect your 2020 tax return. So these unemployment benefits, if you're unfamiliar with these, at the end of the year, they will issue a 1099-G that will show a statement for the unemployment compensation received. So you'll notice that there's an example of the 1099-G there off to the right. And that first box there, box number 1, has the unemployment compensation listed in it. If you notice on the side, also on box number 4 on this form, and then box number, I think it's hard to say, I should have made this a little bigger. State income tax withheld is line 11. There is space on these forms for any federal or state income tax withheld. You would use this form to report your unemployment compensation and any tax withheld from that. So the bad news is that yes, your unemployment benefits are going to be taxable. So the states, at the time that you apply for unemployment benefits, they are supposed to let you know that that a voluntary tax withholding is voluntary, but you know, if you expect to be receiving unemployment for some time and you believe it may increase your adjusted gross income to the point where it's taxable, then yes, it's definitely worth it to withhold your tax from your unemployment compensation. So in general, this is something we would recommend doing. We only have the option using form W4V. So this is the form you would fill out for voluntary withholding. Your only option is to take out either 0 or 10% of taxes. So you either take out nothing or you take out 10% of what it is that you're getting. So there's, really no other withholding that you can do for this. This is the option that they give you, is 10%. So again, if you did have that 1099-G form and you did take taxes out, then that would show up as a 10% reduction from the full amount that you got. So again, unfortunately, you will have to reconcile the unemployment that you received on your tax return this year. So that's kind of the bad news with the unemployment benefits, even though it was great to have that additional $600, and it has really assisted a lot of families. But now that tax time is around the corner, a lot of folks are starting to think about, what portion of that may be taxable. So the other thing that we noticed this year was that there was a lot of telecommuting that happened from employers. So, that kind of made us look at, or is going to force us to look at, our expenses and deductions for the next year. So the question I've seen a lot too from folks is, so it's the example up top. My employer made telecommuting mandatory during the COVID-19 pandemic. So can I deduct my home office expenses, like maybe a phone service, a computer, or an internet service? This is kind of the key word here is employer. If you are an employee, then no, you cannot deduct these business expenses on your tax return. So these are what's considered employee business expenses to the IRS. They are treated as a miscellaneous itemized deduction. So you would have to itemize your deductions in order to qualify these. And unfortunately, when tax law changed in 2018, these employee business expenses were kind of stricken. So we cannot take employee business expenses. If you're an employee on your tax return, you can't claim those deductions on your tax returns from 2018 to 2025. Now in 2025, that'll automatically revert back, and in 2026, we would be eligible for that again, unless, of course, the tax law changes again. So if you are a contractor, or if you're self-employed, so if you are just if you have employer that you go through, but they're not taking out Social Security or anything like that, and you're paid on, say, a 1099 miscellaneous form, so they're not taking out taxes for you, and you are responsible to pay your own employment taxes, then you can use a home office. You can deduct home office expenses on your tax return. Typically, you're going to file a Schedule C when you do this, and you're going to use those expenses and deductions to reduce the amount of income that you earned through your self-employment. So that's just something to pay attention to. That's posed a big question is, because I'm working from home, will I be able to, I've maybe buying more supplies and stuff. Unfortunately, if you're classified as an employee, you will not be able to take out those expenses on your tax return. So other kinds of business deductions, again, we just, want to talk about this a little bit because there were so many changes this year, with folks in their employment. The other thing that may have happened too is if you're an individual that maybe lost their job, but in order to do something, got into maybe the gig economy. So maybe you became a gig worker, or maybe you started a food delivery or something and worked as a contractor for another organization, then you would be able to take out some business deductions for this. And if you're not used to doing this, then your tax return might look a little different this year because you would be filing a Schedule C. The rule with business deductions, and This has not changed from last year to this year, but it's definitely worth talking about because this may be new to you this year if if you have shifted, if your employment has shifted on account of the pandemic. When you consider business deductions, a business expense must be considered ordinary and necessary. So this is directly defined from the IRS. What they consider an ordinary expense is one that is common and accepted in your trade or business. So if you're a delivery driver, you can claim standard mileage on your tax return. So and then a necessary expense is one that is helpful and appropriate for your business or trade. So an expense does not have to be indispensable to be considered necessary. So those, for a little bit more information specific to all the business deductions that you may be able to claim if you did have a shift in job this year, you can visit, again, the IRS website really goes into great detail about that. So it's worth a look. So then the other thing that changed this year, it was charitable deductions. So this was included in the CARES Act. So for individuals or families, taxpayers can deduct up to $300 in charitable contributions, even if they don't itemize on their 2020 tax form. So this was, meant to help out charities and organizations that have really been integral in, helping out with the pandemic. So, if you are making a contribution to a charity, you have up to the end of this year to do that, and you can claim that charitable deduction on your 2020 tax return. So again, that's going to help reduce, the tax that you would owe. Then kind of the last thing that the CARES Act the CARES Act did a lot, but one of the last things that I wanted to talk about today was early retirement plan distributions or withdrawals. So if you were severely impacted by the coronavirus, what the CARES Act has done for you is if you've had to make a withdrawal from your 401k or your IRA in order to help with your living expenses throughout the year, then what they've done is they've taken away the 10% early withdrawal penalty as long as you're under the age of 59 and a half. So the additional thing that happened was of the total amount of that withdrawal, that can be divided on your tax return into the next 3 years so that it doesn't impact you as much. So you can take 1/3 of that total amount on your tax return this year, and then you can claim another 1/3 of that amount for next year, and so on. It's just meant to lessen the impact a little bit. And again, the early withdrawal penalty was taken away. So you won't have to pay that for withdrawals that qualify. You are also eligible to pay back what you withdrew from your accounts if you're able to do so. So they give you the option to do that as well. So what tax deferred accounts then are affected by the changes? So this would be IRAs and 401ks. So again, some employers, just make a note, of this. Some employers, if you did make a withdrawal, may not give you the option, right there to qualify for the distribution, but you can reconcile that on your 2020 tax return. There will be an option to do that as you're inputting your information for the year. Then, if you're doing your taxes yourself, you'll notice that in some of the software. None of the software yet has been released yet for 2020, but also your accountant or whoever it is that's preparing your taxes will know about this as well. Okay, so early retirement plan distributions. Last thing we wanted to talk about then is how would you qualify for this exemption? So they get, specific here. So it's the things that would qualify you is that you, if if you took a test that was CDC approved that diagnosed you with COVID-19, and then you would be eligible for the early retirement distribution exemption. So that's that 10%, that is taken away. And then if you experienced an adverse financial consequences as a result of COVID-19 related conditions, so it affected your job. You were laid off. You had a reduction in pay or hours, or changed your income to self-employment income. Whatever the issue was, if it adversely financially impacted you in some way, then you would be eligible for this as well. And again, the dates for this, this is only for the 2020 tax year. So if you made any kind of withdrawal from a retirement plan from January 1st up to December 30th of 2020, then you would qualify for this exemption, assuming the first two are met. And for this, it's nice that you can take out up to $100,000 per person to qualify for that 10%, to be exempt from the 10% penalty. So maybe if it's you may have a spouse that has an account as well, they would be able to take out another $100,000 from their 401k or IRA or what have you, if your family was adversely affected from the pandemic. So so those are just some of the things that the CARES Act has, some of the ways that the CARES Act will impact your 2020 return. Again, I'm going to plug the IRS website because there is a ton of really good information there. They really go over everything from the coronavirus tax relief. If you've never been on the website before, they've got great ways for you to track your refund status for any payments. This is also where you can enter, if you don't normally get a tax return, this is where they were sending folks, who may not normally file but still qualify for that economic impact payment. They would go here to enter their account information so that they could be paid. And actually that deadline was extended, so I believe they have until November 21st, I think it is, to go ahead and enter that information. So if you don't normally file a tax return, please visit the IRS to input your information if you haven't already, so that you can get your economic impact payment. There's also space here where you can prepare your own tax returns and all kinds of good stuff. And Rachel is somebody who has really used this site to help folks out. So Rachel, would you like to give people a little tour of the website? If we might have a few minutes left.
Yeah.
All right, great. I'm going to stop sharing, and then Rachel, maybe you can pick up.
Alrighty, so this is what the website looks like. If you have not set up for to receive your economic impact payment yet, and you typically don't have to file a tax return, we would go right here to the non-filers, and like Jen said, that's been extended through November 21st. So what you would do is you would click on it, come right here. It kind of gives you a rundown of who should be entering their information on here. And then you just come down here and enter your information, and it'll go ahead and get you started to put your information in there. And then if you needed, say you filed your taxes, you haven't gotten your refund, you want to know where it's at, you would come here and check your refund status. It'll ask you things like your social security number, your filing status, and your refund amount. And then you would submit it, and it'll give you the exact location of where it's at in its process. And then, lastly, like Jen said, you can do your taxes for free as well. So it'll give you a little option to e-file it right here through the IRS's website. And then if you have any questions or you need more information about anything, certain forms, different instructions on how to fill out any forms, you can search the form number itself and it'll give you a whole rundown of what you need.
Okay, thank you, Rachel. You want to switch it back to me so I can share the rest of the presentation? All right. Okay, can everybody see that still? So I'll just hop back here for a minute. In your handouts, again, I just did want to point out some additional helpful resources. These are in the take-home packets, and then in addition, I believe they were included in the email that you received. So it's just got some helpful resources for you. And in the interest of time, I won't go over this too much, but do take a look at it when you have the opportunity. It also has some of our contact information on there, so if you've got any questions, then do feel free to reach out to us. And again, we do free tax preparation at HSP. We will be planning on opening our site in January, and we'll be assisting taxpayers with getting their 2020 returns done. This is free. Again, if your household earns less than $56,000, then that would, in general, qualify you for free preparation. So all of our volunteers that help us out, they're all certified tax preparers. We have to certify every single year. We have to take tests and learn our stuff all over again, before we begin preparing. Essentially what we do is there is a preparer who will prepare the return, and then that return will also undergo a quality review as well. So there were always two sets of eyes looking at the return, just to make sure that we didn't miss anything, or that there aren't any little mistakes that pop up. So again, we also offer you're able to purchase U.S. savings bonds at any VITA site. And VITA basically stands for Voluntary Income Tax Assistance. This is something that the IRS manages, just to help taxpayers out each filing season. So free savings bonds, or not free, savings bonds that you can purchase. There may be prizes if you decide to save a part of your refunds. We like to, give out little incentives. So if you do decide that you want to save something, that, makes it, a little bit more fun and easy to do that. And then we also have prepaid Visa cards that are offered through PNC Bank. So if you don't have a checking account, or wanted to receive your tax return on a prepaid card, that option is available for you as well. So again, we'll be back open in January, and we'll probably start taking appointments at some point in December for that. So also, if you are interested in helping us out and would like to volunteer, help us do some taxes and give back to the community, we are currently looking for tax preparers to help us this year. There is absolutely no prior preparation experience required. There's training that you will get, and we'll help you get through your certification tests, so that you can give back to the community. So if that is of interest to you, then we'd love to talk to you. And Rachel's contact information is on one of the handouts that is in your packet as well. So that is pretty much it for today. We are available for questions if you have any. I've also included our contact information there. Again, my name is Jen, and Rachel is available as well if you want to reach out to either of us through phone or email. And if you'd like to go ahead and schedule an appointment for tax preparation this coming year, then there is an appointment line that you can reach out to. Just give us a call, leave a message, and again, we're not doing appointments quite yet, but we'll put you on the waiting list so that when we start making those appointments, we'll reach out and contact you. So are there any questions that anybody has? I know we're probably over our time a little bit.
There are no questions.
Okay.
Yeah, I was looking in chat too, and I didn't see any questions. I did go ahead and post a link in the chat box to all of today's handouts also that have the contact information in there and the handouts that you were talking about. And that way folks can reach out to you about any specific questions and also about those tax appointments in the coming months. And in a normal year, a number of our branches are offered as a location where you can schedule an appointment. This year, I'm not quite sure it's going to happen. Who knows? We have our fingers crossed, but in the future, when things return to our new normal, hopefully we can partner up again and offer up some of our branches as a location, a site where you can go to have those taxes done too. Great. I don't see any questions coming in through chat. Did either of you have any final parting comments?
I appreciate everybody for coming out today and listening to me ramble on about taxes. So certainly, if anything pops up over time, like I said, you're welcome to reach out to us. We're happy to help with any questions that you have. Or if you've got something specific that you want to talk about, a specific issue, we'd be happy to chat too. Okay, so
yes,
again,
I can attest to you being a great resource because I know when people call with those specific questions, I refer them over to you. So please feel free to reach out to them. It was a lot of information to take in today, and you can go back and re-watch this recording. Again, also, if you would like to kind of go back and jot down specific notes that may be helpful for you as well. So those will be posted in the very, very near future also, so you can go back and review this program.
Okay, well, if there's no questions, then again, thanks so much. And thank you, Daryl, for hosting all this. We really appreciate it.
Thank you very much, and we'll see you again tomorrow for our budget and crisis program, where you can learn how to make a budget during normal times. That way you'll be extra prepared for these situations such as 2020 and what COVID-19 has really, how it's really affected what we had in our reserves to spend, and also just it's really tapped into our resources. So budgeting is definitely something that's on my agenda to be better with in the future, because this year really highlighted the need for it.
Oh, yes.
So hopefully you'll join us tomorrow afternoon.
All right. Thanks so much.
Yeah.
Thank you all. We'll see you soon. Thanks.